This week, SoFi announced a massive partnership with Fortress that has the potential to change the entire dynamic of their business and how the market is valuing this company. It has the potential to accelerate the financials past the point anybody thought of. And on the back of this news, the stock broke the $10 range, a range we haven't seen for the past year. All of this is very significant, and it's just one of many pieces of news that have dropped in quick succession over the past 3 days. Let's cover them all in this video. So, just a point of housekeeping first and foremost. I'm going to be traveling over the next 2 days. If there is news on Thursday and Friday that's massive and earth shattering, I'll make sure to find the time to make a video. But as of this recording, this is just Monday through Wednesday. And don't hold that against me because there's a ton of news actually to cover because SoFi has just been dropping pieces of news every single day this week. The stock is up 18% over the past 5 days. It shot up on Monday, rightfully so, after this Fortress news, and it pulled back a little bit slightly today. But this is the first time that we've actually seen the double digit range since like November or December of 2023. So let's first talk about the Fortress deal. I think this was the biggest piece of news on Monday. I talked about this slightly yesterday with Tanner on the Bootleg Weekly podcast where we broke it down. The title says SoFi expands the loan platform business with a $2 billion agreement from Fortress Investment Group. The agreement will expand SoFi's capabilities in its loan platform business, where the company refers pre-qualified borrowers to loan origination partners, as well as originates loans on behalf of third parties. Quote, SoFi's loan platform business is an important part of our strategy to serve the financial needs of more members and diversify towards less capital intensive and more fee-based sources of revenue, said Anthony Noto, CEO of SoFi. We're pleased to see continued strong demand for SoFi's loan platform business, Fortress's collaboration, seamless execution, and the appreciation of the platform's value proposition makes them an exceptional partner. Less capital intensive and more fee-based sources of revenue. And the fact of the matter is that even if the fees themselves are small, like a commission essentially, with such a big amount as $2 billion, what trickles in to SoFi's bottom line is actually going to be very significant. And while we're missing some key details around the specifics of this deal and how those financials shake out to be, it's going to be significant because if you're looking at some fairly standard commission for this type of stuff, that's going to be a pretty big acceleration to SoFi's bottom line in terms of what that's going to look like from an EPS perspective. Just talking yesterday with Tanner, I mean, we were thinking about 6 cents or 7 cents EPS for this deal alone. And as I've been thinking about this, there's really three things that I want to cover. First of all, is the fact of personal loans itself. The bear case this year, and the reason why many analysts were bearish on the stock itself and have pretty sandbagged price targets, is because personal loans and the lending segment as a whole was expected to be down 95 to 92% of previous levels, so down year over year. And analysts who were predominantly viewing SoFi as just a bank were saying, how can we value it at such a premium when it's not even growing their lending segment, which is the bread and butter segment? And this is interesting because throughout the year, we've seen stronger demand for loans. And Anthony Noto is even saying it here in this quote. They're seeing continued strong demand for the loan platform business. These deals add more further validation to that. Because if SoFi comes in and they're in fact not down year over year on lending, that's going to bode really well because it's going to lead to a re-acceleration or a repricing from what analysts are expecting versus what they're actually going to end up doing, right? If analysts are thinking, oh, well, SoFi is going to come in at 6 cents EPS for the year, and only this deal alone gives them 6 cents of EPS, well, all of a sudden, all of these analysts are going to have to rush to readjust their models around what they can expect for SoFi because lending is much stronger than needed. So that's point number one. Point number two is it doesn't really stop any other investment groups from having the exact same deal with SoFi. This is not the first time SoFi has announced something like this. I don't think it's going to be the last time, right? If Anthony Noto is saying like, hey, we want to be able to diversify our revenue streams and we want to have more of these fee-based sources of revenue that's less capital intensive, SoFi is open for business, and all of these different investment groups can approach SoFi for similar deals, in which case that would really accelerate SoFi's revenue even more. The third point that I want to highlight is that by doing more deals of this nature, it diversifies the revenue model for SoFi. It accelerates the hybrid multiple for the business because all of a sudden you have this business that is not just doing net interest income, that's not just a lender, they're actually doing this fee-based income. They have different sources of income. In many ways, it's sort of like a subscription, right? Like you have these institutions coming to SoFi, and SoFi is just getting a kickback from all of these deals that they're doing, right? And so I think that diversification, especially to less capital intensive sources of revenue, is a smart move for SoFi, and it's going to be seen positively by analysts out there when they're adjusting these models going forward and accounting for more of these sorts of deals. And what came to my mind earlier today as I was reading this more in depth was that it's interesting because I used to have this thing with Tesla, and I would say that buying a share of Tesla is essentially like a call option on all the innovation that they're going to do in the future. Because, when I was buying Tesla, Optimus was not even on the radar at all. And I feel the same way with SoFi, right? Because SoFi keeps innovating. They keep crushing their numbers consistently. They come out with numbers that are above analyst estimates, and then they accelerate those numbers, and then they release products that accelerate those accelerations even further. And so this business is really like a call option on what further innovation can come out. I might buy a SoFi share at $10 today, and yet in 2 years, they might come out with something that's not even on our radar at all that totally restructures their business model and accelerates them even further. And so I think that's the cool thing with buying innovative companies is that you always are on the lookout for what they're going to announce next and what is the next thing on that product roadmap and how are we going to get a more lucrative return on shares we've already invested. And so that was the news for Monday. The stock did very well on Monday and it carried on those gains on Tuesday, whereby we had two pieces of news that I want to cover in this video. First of all, we had this Nova expansion. So essentially, it was an expansion of a multi year partnership with Nova. And the press release here highlights that this expansion enables SoFi to access consumer permissioned bank data and cash flow analytics through Nova Credit's Cash Atlas solution. And it gives SoFi the ability to better serve its members. And it continues to say that while traditional credit reporting helps lenders assess an individual's history of repayment, cash flow data provides a more real time and granular view of a customer's financial health, allowing lenders to generate a more complete risk profile for consumers across the credit spectrum. So basically, in layman's terms, what this is saying is that a credit score, it's a totally arbitrary number, but by having cash flow analysis as well in real time, it allows lenders to see a more complete picture of your financial health aside from just a credit score. SoFi's used Nova Credit Services since 2020 and intends to implement Cash Atlas in its loan underwriting to assess credit risk, improve credit eligibility, and enhance its members' experience, which is great, right? Because there's a lot of people who don't have a fantastic credit score, but they have great cash flow and they're more than good for that money that you're going to be lending them out, right? And so those people would normally fall through the cracks in a traditional system that only over indexed on the credit score. But when you go one level deeper and you look at the financials of these people and the cash flow statements that they have, then you're going to realize, oh, wait a minute, this is a really great person for me to lend money out to. And so that's going to allow SoFi to make smarter underwriting decisions because they get to look past just the credit score into the cash flows and just have a complete picture of this person when they're loaning them money. The second piece of news on Tuesday was a SoFi partnership with Venus Williams and Cameron Brink to launch the Give Her Credit campaign in honor of the 50th anniversary of the Equal Credit Opportunity Act. SoFi is going to begin accepting submissions to award $500,000 to 50 people, each receiving $10,000 to help further advance women's financial independence and inspire their financial ambitions. Great marketing campaign for SoFi. I think it's going to bring a lot of buzz. And this is just another example of SoFi following their playbook of having partnerships with athletes. I mean, we've seen this be successful for SoFi in the past, this entire marketing campaign around sports specifically. I mean, we saw it with Wyndham Clark. We saw it with Jason Tatum. We saw it with Justin Herbert. And so SoFi partners with athletes all the time. With Venus Williams and Cameron Brink, I think it's going to be no different. On Wednesday, we moved on to news that Anthony Noto shared himself, as well as David Foyer, the CPO of SoFi, both tweeted this out. It's a press release highlighting the adoption of Cyberbank for SoFi. The press release says, quote, SoFi announced its adoption of Galileo's modern cloud-based Cyberbank core to power a range of payment services to commercial clients, including debit, prepaid, ACH, and wire transfers, and associated banking services. Cyberbank Core became an integral part of Galileo's offering after SoFi's acquisition of Technisys in 2022. Here's what Noto said in the press release. He said, Galileo's modern cloud based banking core offering is cutting edge, enabling banks, fintechs, and financial service companies like SoFi to quickly launch new products, effortlessly scale financial services products, and stay ahead of the evolving needs of customers. Importantly, Galileo is uniquely positioned to understand and meet the regulatory expectations of customers since it operates under federal banking regulations as a subsidiary of SoFi, which is a federal bank holding company. They also listed out the benefits here in the press release directly, basically highlighting a faster, more modern, more scalable tech solution, all stuff that we've known by covering SoFi consistently. So I won't really dive too deep into that. And I mean, we could have seen this news coming a mile away. We knew it was coming. We just didn't know when, because all of this is part of their vertical integration. It's a big part of their competitive advantage. And it's going to be accelerating SoFi's pace to have Galileo essentially be the thing powering the other side of the business, right? Again, very bullish news there, but nothing really too surprising. Really great pace of news over the past 3 days. And I have seen the news actually pick up this week, which is interesting because earnings is coming up in a couple of weeks, right? Earnings is going to be on the 29th in just a few weeks here. And they're expected to report the fourth quarter of GAAP profitability. As I've mentioned in previous videos, this is going to be very significant because it leads to SoFi being profitable on a trailing 12-month basis. Anticipation and excitement is building. We can see that in the price action. And the first question with regards to price action is, well, is it extended or are we going higher? And you got to keep in mind here that SoFi hasn't seen these levels all year long. And even if you zoom out and you look on a 3-year view, the double digit range is pretty thin air on the top of these peaks. Even when SoFi has been able to break through, it hasn't been able to hold it for too long. $11.70 is the 52-week high. If you were to ask me, does this pull back or does it continue? There's still a lot of short interest here. I think there's a lot of expectations baked into earnings. If it holds above $10 on Friday, that's going to be good from an options point of view. I wouldn't be surprised if we see a slight pullback. I don't think we're going to see a huge pullback though, because I do think that momentum is building. I mentioned this in my last video. I talked about it quite a bit actually. I think that momentum is building for the stock and it's going to be impossible to be ignored. The market is going to have to re-rate this stock as you see 4 quarters of profitability, as they come out with deals like this Fortress deal that greatly accelerates their financials, then the stock is going to have to respond to that. After earnings, if earnings are as good as we think they're going to be, SoFi has a good chance of breaking through 52-week highs. And when that happens, I think that there's going to be some price discovery, and I think that's going to lead to a further sustained rally. But from now until earnings, the main thing that I'm looking at is whether or not SoFi can maintain these levels. And by maintain these levels, I mean like even if it falls back to 950 or 970, like in that $1 range plus minus from 1050 to 950, if it chops between there for 2 weeks, that's perfectly fine with me because it builds a heavier base there. If it can maintain the double digit range and it stays above 10 for the next 2 weeks, then that's even better. But I wouldn't be surprised to see a lot of people selling stock. And in fact, we have been seeing retail selling stock en masse as this rally has gone up. And I don't blame them to a certain degree, right? Because again, this is the first time this year that SoFi has seen these levels. So a lot of people who bought in 2024 haven't even seen double digits on SoFi ever. And so people are going to take profits. I get that. But if we zoom out and we look a few months out, I do think that momentum is building here. And I do think that the tides are turning for SoFi. And 2025 is going to be a great year for the business. But I think that the stock is definitely going to front run what the fundamentals are going to be in 2025. We'll have to see what happens. And as more news comes out, I'll be sure to just hop on and make a very quick video with some raw thoughts. But I'll be a little bit harder to get a hold of over the next month. Thank you so much for watching, and I will see you in the next one.